Hi everyone and welcome to the property webinar. I'm Adam Humphreys, a wealth planner at Melbourne Capital Group. I'm joined here today by Daniel, Managing Director of API Global. In this session, Daniel will be outlining investing in property, what investors should know. Basically giving you a webinar overview of today. I'll do a brief introduction of myself, Melbourne Capital Group, and basically how API Global fits into our wealth solutions here. Dan will go through an API Global overview, how property actually works and the structures used, go through some market data and insights, a couple of properties that are available at the moment that may be of interest, and then we'll answer any questions at the end. A bit about myself and Melbourne Capital Group. Basically, like I said, I'm a wealth planner for Melbourne. I'm based in Kuala Lumpur in Malaysia. Offer independent financial advice to my clients in various countries. Independent mean I'm not tied to specific solutions or funds for clients. I provide holistic financial planning advice tailored to my clients' needs. This can cover areas like protection and succession planning, pensions and retirement planning, investment solutions, obviously property, where Dan at API helps us with that side. With Melbourne, we're an award-winning independent financial firm. We deliver bespoke personal wealth solutions, and we take a client-first approach, basically working as your trusted partner to support long-term financial success. We are a chartered insurance institute professional partner firm, so that bolsters our commitment to professional excellence. Basically, with the Chartered Insurance Institute, that's a UK-based professional body dedicated to building public trust in insurance and financial planning profession. With API, how that fits in our solution, basically we're investing in property that offers our clients wealth diversification, stability in global markets, and also a hedge against currency fluctuations. API have been fully vetted by our investment committee, and they're a trusted partner in property investment for us. They provide a comprehensive end-to-end solution, assisting from everything from sourcing the correct properties for you, helping you with the mortgages, to obviously helping with the management and the lettings on that side as well. If after this meeting you'd like to arrange a separate introductory meeting to discuss any others I cover, I'd be happy to set that up. We will be emailing the API webinar as well for the recording, and that would be the same about arranging a meeting with Dan, obviously just to solely cover the property side. But what I'll do now is I'll pass you over to Dan, who will take you through API and property investing.
Perfect. Thanks, Adam. Thanks for the intro. Hello, everyone. Nice to meet you all. Yeah, as Adam said, I'm Dan Earle from API Global, Managing Director of APAC. Work very closely with the Melbourne Capital team to look at this part of people's portfolios. Obviously, part of that, their sort of holistic plan would come through Melbourne Capital, and where I fit in and my team fit in is to look at this asset class and make sure that we're obviously helping clients do and achieve what their investment goals are within this space. Let me try and share my screen. Adam and I have had a few problems with the Wi-Fi and the software, but hopefully that's sharing.
Yeah,
Adam, sharing okay. Okay, yeah. Good stuff. And Adam, let me know after 5 minutes if there are any questions from people.
Yeah.
Okay, all right, cool. So look, API stands for Assured Property Investments, essentially with the global leader in investment grade product. So we're not the people to speak to about going and building your dream home or buying your dream home, but we're the best in the world in terms of building high performing real estate portfolios globally. And usually the conversations we're having with clients are very similar to what your Melbourne Capital investment advisors will be talking about. You know, we're talking about retirement planning, succession planning, wealth preservation, but using real estate as the asset class. Done about £2 billion pounds worth of revenue, been going for the last sort of 15 years, 19 offices globally. You know, one of the longest standing in this market for a reason. And as Adam said, we're the only global signed off real estate party for Melbourne Capital. And you know, we align very, very closely in terms of our values of how you scale long-term sustainable portfolios for clients while hedging risk. These are the 4 core markets that we focus on. And look, today we're going to focus on UK. I'm actually might show you one opportunity in Phuket because it's very, very recently launched, and from a retirement planning perspective, I'm just really excited about this one. I think it aligns to a lot of people's strategies as well. But high level, look, UK, as I said before, we'll go into more detail later, but the fundamentals remain incredibly strong. It's the second most traded market in the world for a reason. You know, where it really starts is you've got a sort of tiny island with only a certain amount of land. You've got nearly 80 million people living there, and still what is the 5th or 6th largest economy in the world. But you've got a 4.3 million gap in supply and demand of units. So the supply and demand, you've got the whole population of Dubai, where I'm sat today, missing homes, right? And so supply and demand is obviously the biggest factor in any kind of investment in terms of what creates growth. So you have a huge supply and demand imbalance, which will go on for another 50 years. And actually the government are doing their best to extend that as much as possible. So that gap is growing, not shortening, through silly decisions, in my opinion. And then, you know, the average age of first-time buyer, depending on region, is between 38 and 42. So half the market is actually renting, right? And so what we've got when we zoom out is, from a macro level, you know, you've got a lack of land, a massive supply and demand imbalance, and then you've got an unlimited amount of people who are actually using your service in this form of rent. So you're not going to have a problem renting these places out and things. So when you actually zoom out and look at it as a project or an investment product, it really works, you know. And this is, as I said before, why it's the second most traded market in the world. Also, great things if you're based somewhere like Malaysia, like Adam is, you know, if you're earning in pounds, it's a very good currency in comparison to a ringgit. You know, you probably only need a couple of places paid off to successfully be able to live very, very comfortably. And that's very similar to, you know, most sort of East Asian countries like Thailand. If you're living in baht and you're earning in pounds, and there's very good limited company structuring that we can effectively sort of help from a tax perspective to make sure that you're getting your tax-free dividends paid in the right way if it's in good tax environments. And also you can do things like loaning the business money and paying yourself back as a loan repayment, with very established legislation, obviously, across the UK. So yeah, that's where we'll be focusing today. But UAE, look, with what's going on in the world at the moment, over here, I'm telling everyone to wait until after summer. That's the place that we're going to look at, and, you know, hopefully look at it from a distressed assets side of things in the later part of the year. Then we've got Phuket and Bali, which are essentially the best yield markets in the world. You know, you're talking anywhere from 10 to 15% net yield. So if you're, and this all comes down to supply and demand imbalances again, right? So, you know, if you're renting your place out on a day rate like an Airbnb, these are two of the best markets in the world to be able to do that. If we do have time today, I've got an incredible investment that I'd like to flick over to show the guys. Look, API is the mothership, and we've got a number of different businesses that sit underneath us. So capital partners arm of the business is sort of specialist consulting to all kinds of different deal structures, but usually of a higher ticket size, so sort of £2 million plus investments. GoGo Proper is a bridge financing business for short-term loans. Valorum is a mortgage and lending business. Redstone's a lettings and management business. One of my favorite things from an API perspective, I've got a number of properties live with API. Don't know the name of any of my tenants, and I'm spoken to them about a boiler breaking. So full end-to-end, fully managed service. for clients. Obviously, if clients do want to use their own lettings and management and so on and so forth, they're allowed to do so. There's no fix that you have to work with us on it. APIX is our professional athlete arm of the division, an exclusive investor club. Essentially, what we're usually doing for a lot of these footballers, golfers, tennis players, people like this, or higher net worths, is really making their money sweat as hard as possible while they're still working, to create quite a lot of using leverage a lot of the time to create large amounts of capital appreciation. Then what we're doing is using that money to drive down debt, usually about five years out from retirement, to create passive income in retirement. So I don't know if anyone's any football fans out there, but you're not doing a Craig Bellamy or a Wes Brown where they're broke because they spent all the money while they're working and now sort of struggling, sadly. Adam, how are we doing with questions and things? Any yet? Oh, no, I don't know if you're still there. Okay, so look, we've got a complete end-to-end solution, and look, where we beat everyone else is really the market research and due diligence. Fundamentally, as a business, these are the key core things that we actually do and really focus on. So, from a market research perspective, we look at thousands of developments right across globally, right? I mean, across even the Phuket market, we looked at nearly 600, and we signed off on 2. UK, over 1,000, and I think we signed off on 12 last year. So really finding the very, very best in class opportunities from a macro perspective, and when we see a good 10-year growth trajectory, and then sort of zooming in and going micro, right? Where are the growth zones within the growth zones within that, to secure the best investment product. Then after that, move to the due diligence layer, and this is where we're looking at liquidity of developers, making sure that JCT contracts are being signed, 10-year build warranty, so on and so forth, really mitigating risk for investors. So first of all, sourcing the best product, but then also, drilling down to make sure that we're hedging risk and for each investor. Then the investment advice, this is where I'd sit in as part of your Melbourne Capital's advisors team for the real estate part of your asset base. But the whole thing here is what we're trying to do is get clients from A to B and what they're trying to do in their investment journey, and put products which will align to do that, and a strategy in place. And often it's, we're trying to, it can be legacy planning to set up their children in the future, and it can be, retirement planning for people. And as I said before, often we're trying to use things like leverage initially to make our money compound 3 or 4 times for every percent it grows in high growth areas, and then let that go for a number of years, usually between 3 and 5 years minimum. And then we've got that capital appreciation on the top end, where what we're trying to do is use that money to usually drive down debt if we're trying to retire soon, to create a passive income, or we can release that equity again and go again, depending on where that trajectory is. But it's my job to sit down with each individual and make sure that we're maximizing the returns while hedging risk. And then, look, sales progression team to hold your hand through everything: legal support, construction phase support, mortgage support, completion phase support. We help with all the tax mapping strategies as well, lettings and management, and then obviously the portfolio optimization piece, where we work to make sure that we're maximizing the returns and aligning to your overall investment goals. Multiple different deal structures. One of the most advantageous ones is when we come in as a master agent. Where investors make the most money on developments is the first 20% of sales, because that offsets the risk for investors. So if we can come in, if not for investors, for developers, and then pricing goes up through time. So what we try and do through our private banking network, through companies like Melbourne Capital Group, you get access to below market value stock before, and then we sort of release it out to the likes of JLLs and Savills and so on and so forth. We have a very close relationship with Bluecrest Capital, which is the largest British-owned hedge fund, to buy distressed assets. Obviously, another very advantageous thing for clients. And if that's something that they want to look at, and I'm working with them, I need to be their eyes and ears in the market for what aligns to their overall sort of holistic goals and strategies. Look, we protect our clients. We're called Assured Property Investments, and the reason we've been going for so long is we do make sure that we're dotting the I's and crossing the T's for our clients. So all funds held in escrow, true transparency and breakdown to the penny, safe and flexible from a safeguarding perspective, low capital exposure, and obviously the portfolio support. It's not about taking a short-term view on things. We really need to align to the overall investment goals of clients, because this real estate, really, when we're looking at it from an investment standpoint, is a vehicle to get from A to B. And there are a number of different reasons why I believe real estate is the best asset class. But, realistically, if it's going to be part of your retirement planning, we need to work back from how much you're trying to make there and what that timeline is going to look like for you. So we can execute it for each individual circumstance of that client. Look, these are the things we care about. You're never going to hear me talk about beautiful kitchens and bathrooms. Every single development that we take on board has all of these things. We're very, very strict around what we take in as investment grade product. And then look, you're in good hands if anyone is on this today. I work very closely and personally with Melbourne Capital Group, and I personally consult to their clients as part of the deal that I've agreed with them. But look, I came in as an investor to API. I continue to invest in API products, and as a business, we buy into every single development that we go into. So, we're in with all of our clients on any development that we sell. Look, that was API really quickly. Now I'll go high level over into the UK and just really quickly. Obviously, today's a bit of a teaser video on who we are and what we do. Going into the UK as an asset class really quickly, and then I'm going to show that Thai option for retirement that I think is we might even do another session on just on that. But yeah, only launched a few weeks ago, and it's we've just been signed off, so very, very interesting. But
yeah,
from a UK perspective, sorry, Adam.
I was going to say that I think that'd be good to go through the UK one and a UK one, just to give an idea, because they're obviously both very different solutions, aren't they? Yeah,
correct. And look, I think that anyone on the call, I'll fly through the sort of mapping of the UK. I mean, if we need to go into more detail around all of that, we can. But today I'm going to show you just two basically products that I think are some of the best investment grade products in the world, to be honest, at the moment. These two particular, both very, very different. But look, this is what the UK real estate looks like. It's not, this isn't the best places that I would pick for people, the best investment grade product, which we find. This isn't with leverage and things like that, where we can do 4 times the amount. It does what it says on the tin. Very, very robust asset class and way of doing it. Obviously, this was 2008. The market, the worst financial crisis of all time. It recorrected a year and a half later. I think markets, Adam would tell you better, but I think you've talked about 6 years for them to recover. Look, we only work in core markets. I'm not going to drill down into each market too much today, but as an example, this is how we subsect different zones. This is London as an example. All these dark red bits we don't want, because the price per square foot is too high and the yield isn't good enough. So they're probably the places you want to live, but they're not what we want to buy. We want to buy regeneration. So places like this, there's a place called Cricklewood here, where we've got an 8 billion regeneration that's going on there. So, we can, and everything that we're doing here with regards to this is just making data-driven decisions, right? So the reason why Cricklewood is an example is because of this, right? We look at London 1 beds over the last sort of, I think it's 8 years, 7% growth. 2 beds, 9%. When we look at regeneration schemes, 1 bed's 26%, 2 beds, 28%. So what do you buy? You buy 2 beds in regeneration schemes. And as an example, this is the largest regeneration scheme that's happening in the first 2 zones of London, with an 8 billion valuation, completely redefining this whole area. 1.4 billion's already been spent in this area, another 420 million. So all of this is happening, it's on the way, but we're buying before all of this happens. And so, from that perspective, you're buying a 550 grand 2 bed, which you would spend 160,000 probably on. With, if you look at any other area which has had anywhere near that type of spending in London, first 2 zones, you're probably talking Elephant and Castle or Battersea, where you're 1.5 million for a 2-bed. So even if that gets halfway there and it comes up to $1 million and you spent 550 on it, well, you spent 160,000, but price was 550. You could have made 450 during that sort of hold for the sort of 5 or 6 years. And if you had a northern portfolio, you could release that equity to pay that off, as an example, as a mapping. Look, I'm not going to go into too many different case studies and things. I'm conscious we wanted to make this a short and sweet webinar, but look, the power. There's 3 main reasons why real estate, in my opinion, is an absolute must for anyone. Obviously, the safety of it. You've got the banks and the government, which are the 2 biggest stability factors in the world, incentivized to keep it stable. So it is the most stable asset class. The power of leverage is absolutely massive. You know, what asset class which is so stable can you use the bank's money to make you money? You know, if you're only putting in, you're sort of cheating the game in the optimal structure, because you're only investing maybe 25 to 30%. So every 1% that grows is actually 4% return on capital invested. And then with you know, if you can use an interest only mortgage, which you'd use at the moment because of inflation. So the price of money, you know, we're at 3.8% at the moment. So the value of money is decreasing in value. So you don't pay off your debt at the moment. You let that crush itself, and then your money's compounding on the top. So very, very unbelievable investment structure, really. And this is why people who work at these sort of senior banks and things, when they start seeing the structures that we put clients into and using the leverage, it's very, very advantageous. But then the major thing when we're talking about retirement planning is you've got 2 revenue streams. So you've got capital appreciation and yield. And as soon as you get rid of the debt in any of your businesses, or, you know, your property, you know, you've got an inflation-proof business that just kicks out money. So it's passive income for retirement. So I would argue that part of any retirement plan, you know, you should be looking at real estate as having it as part of your diversified portfolio. Look, why invest in the UK? API support and knowledge is number 1. Look, we look at thousands of developments. We find the best ones. We structure it. We make sure that it's done in the right way. The housing deficit for 50 years is obviously the big one. And that's the supply and demand imbalances, and then generation rent. You know, the age of first-time buyer. You know, the currency side of things is very, very strong as well. If you're going into the lesser end of the currencies. From a just market perspective, but you've got on the top right, you've got your 4 million missing homes. That's you know, the supply and demand imbalance. Generation rent on the left-hand side, that's your supply and demand of people actually an age of first-time buyer. So that's half the market. And all we're really doing for people is allowing them to invest like the world's biggest investors, like BlackRock, or, you know, the pension giants. You know, Australian Super, here as an example, one of the largest super funds in the world, just put 3 billion where? Into Birmingham. Why? Because of year-on-year growth there. I mean, even the Crown Resort has actually put a load of money in there. And you know, this is just high-level overview of the next 5-year projection from Savills. Now, even if we're traveling at the same level as the whole market across the UK, and we're only investing 25 to 30%, we're doing 100% return on capital invested. Obviously, we'll massively outperform that if you work with API, and because that's the best investment grade product. But these are the type of things that you know, we're not reinventing the wheel here. And once we put it into investment grade structures, it really starts to make sense. I'm not going to go into too much of the structures today, but, you know, higher level, you know, if we are building family investment companies, if we have company A, which has got high yield, we'll pay that debt down as quick as possible because it'll be cash flow into the business. If we have company C over here, we might actually release equity out of this, right? We might think that, okay, so this has got high capital appreciation, but the yield isn't as great. So if we only leave 20% in there, every 1% that grows is 5% return on capital invested. So, you know, say we were moving at 5% a year from a capital appreciation, which is for that type of product, we can pretty easily do. You know, every 2 years you're doing 50% return on capital invested here while kicking out, you know, your cash flow here. So very, very good fund structuring we're able to do. I'm just noticing that I was trying to get this to 30 minutes. We might slightly run over, but I'm going to go to just really quickly on the product here, because I think it's important just to show these 2 products as quickly as possible on here. I don't know if I've got any. Okay, yeah, I have got a couple. Okay, so this is Velocity in Manchester, really recently launched. Manchester is obviously the biggest macro growth in the whole of the UK at the moment. When we're going into this as an investment, I mean, price points are phenomenal and amazing payment plan on this. You know, with Q3 2028, we're only having to put 20% down until completion. Obviously, that means that every 1% this grows during that period is 5% return on capital. Thinking around the 6% yields, 999-year leasehold, so virtual freehold. Developers are great. I'm not going to go into too much detail on them today. There's full mapping and investment case videos we can send on this. From a location perspective, really, really strong in terms of you're connected to everything here. You can be, I'll show a better view on this in a minute, but I mean, Deansgate smack bang in about 9 minutes. You're right onto the M62, very, very fast. Manchester Airport, you know, incredibly quick as well. And actually, from a perspective of, you know, Media City and Old Trafford and things, you know, you're riding your bike very quickly to get in there. When we talk about the holistic case on why Manchester, yeah, I think the numbers speak for itself here, and you know, we've got whole I could death by data, to be honest, but these are some of the things that we picked up which we think are key. So look, you've got 110 billion economy, which is the largest outside of London, 5,000 people moving to the city each year, you know, more 25 to 29-year-olds in the region than anywhere else. That's massive because that's actually a great target investment group. They're starting to get a bit more money now. We don't deal in the sort of lower end of the market because we want to offset risk of what's going on from a landlord rights perspective. I think if you work with the medium to higher end of the market, it's far better, and also generally yields tend to get better once you start stepping into that market, and particularly as well from a capital appreciation standpoint with well-structured products. Every one in 3 people in Manchester rents, so massive rental market, 120,000 students there, one of the largest student populations in the whole of Europe, where you've got 51.5% stay rate. So, you know, if you split that between 3 years of uni, you've got 20,000 people staying there each year. And this is actually why we're seeing huge macro shifts into this region, you know, by people like Amazon, Bank of New York Mellon, you know, you name it. There's huge organizations. Google have got a huge office there now. And this is because you're sucking up all this really young talent cheaply. From a rental perspective, over the next 4 years, you're looking at 21.6% rental growth. Number one in the JLL Big Six report, which is one of the most respected reports in the UK for 4 years running for future growth. And then 27.6% projected growth between now and 2030, which, to be honest, when you're looking at that, if you're only investing 25 to 30%, you're doing nearly 100% return on capital by that time. And this is why it really starts to make sense. That I'm not going to go into too much detail. Adam's just messaging me now saying we're really close to the 30 minutes. But look, 3 minutes walk to Old Trafford, 2 minutes to Trafford Bar, where you're in Deansgate, Castlefield for 9 minutes. I mean, that is the bullseye of Manchester, Deansgate, where very, very great connection. We don't need to talk about it. This is really what we're buying though in this type of area, right? You know, you're buying massive, another 8 billion master plan of regeneration, right? And we're getting in there before all of this has actually happened fully, right? And you know, if you know anything about real estate, it's about that. All of this whole area, which has obviously just been announced and everything, this is all commercial, whole new commercial district, thousands and thousands of jobs. The regeneration of Trafford City is, once again, you know, absolutely huge amount of spend going on. And actually the civic quarter, which this is actually in, right next to obviously the cricket ground and everything, there's even 1.2 billion of regeneration which is happening within this area. So buying in at the price points that we're talking about, where you're like, you know, you can get a townhouse for nearly 400 grand, or, you know, a one bed at 215,000, very, very good investment in my opinion. And you know, you're going to have some decent amenities on site here with things like a wellness centre in terms of fitness, but not too heavy in terms of, doesn't have like, you know, pools and everything like that. But it does have a co-working space with a gym. And look, incredible payment plan. So 10% on exchange, 10% 6 months later, and the rest on completion. So very, very interesting one, which cash flows phenomenally. that's one. And then this is, I'm just conscious of time, but this is the last one. This is very, very different. So this is in Phuket. This is the first Marriott autograph residences in the whole of Asia. So look, the reason why we like this as a product, there's a couple of things. We can get full 100% foreign freehold, right? You've got Marriott as a brand, which is globally recognized and also has a standards. There will be a hotel attached to this as well. You know, from a price point perspective, you know, you're talking about 176,000 for a 1-bed, 2-bed 317,000, and 3-bed at 517,000. So, you know, and also on this, we're able to offer financing, which is bespoke, which we've managed to secure from, particularly from Capstone. And this is why we feel very comfortable with this. You know, Phuket previously we didn't see as a market that we thought made sense because of the tricky leasehold environment and developer issues. I mean, you can lean on some of the walls in some of these places and fall through them. Capstone's a phenomenal developer who API previously worked with. You get full benefits like this from like Marriott Vacation Club. So where I really like this as an investment is it's going to knock in a, you know, sort of 10% net yield sort of day one. But when which is going to be great from a passive income perspective for retirement, but because you're part of this Marriott Vacation Club and things, say you wanted to go and live here for, I don't know, a month, a year, right, enjoy it, then when you're not there, it's going to be knocking in a great yield for you. But also, when you go around the world, you can be staying in all these different vacation clubs place, probably making money because of the price point that you're actually staying at was highly discounted, and you'll be making money on your place. So I really like this as a retirement play. Obviously, you get the Bonvoy benefits for the sort of 5,000 Marriott hotels globally. It's in Bang Tao, which is by far the best place you should be investing in Phuket by a mile. For anyone that doesn't know where this is, you're about 30 minutes down from the airport, and you have huge amount of spend which is coming on around here. It's right in the heart of this, where you're next to everything. You know, you've got all your education of UWC and these world-class schools. You've got hospitals all around. Once again, alluding to the retirement side of things, but you know, you've got Boat Avenue, which is literally probably the best F&B street in the whole of Phuket. And then on site, the amenities are unbelievable. I mean, you've got ice baths, saunas, yoga studios, pickleball courts, tennis ball courts. You know, free pools. It's phenomenal. All day dining. The reason why we see it as an investment grade product now, though, is because consistently for the last 10 years, we basically had an average around a 6.4% capital gain. And it's rode through things like COVID. And it's actually because of what's happening globally from these wars that are happening. It's been seen as a safe haven. So, you know, you've got a lot of Russians and Ukrainians which have moved there, and also from the UAE. So it's not just a holiday destination now, which we at API tried to sort of move away from. Now we're seeing it as an investment grade product on its own, let alone obviously the growing by 20% a year from a tourism perspective as well. And so, yeah, it's just been tick for us in terms of this investment, because we can get the freehold safety of it. The management company is a world-class management firm with a branded residence attached to it. And obviously all the macro growth and spend that's happening in the region. And we believe that now is the time to buy because of this, these wars going on. There's a huge amount of capital that's flowing in. So prices will be going up. Yeah, actually from a visa perspective as well, one great visa, which I'm discussing with all of my clients on this as well, is this wealthy global citizen one. So if you have 1 million USD worth of assets globally, this can be inclusive of a 500k Thailand property, which you could buy through us. It gives you a 10-year duration on it. All of your foreign earned income is tax exempt. So, you know, if we were building a portfolio in the UK with things like the Velocity, paying ourselves in tax-free dividends in pounds, living in baht in these places, you don't pay tax on your foreign earned income. So very, very effective. Once again, I believe in the retirement side of things, let alone all the great things of living there. So, and look, this is absolutely, it comes down to literally the knives and forks. This is a plug and play, completely managed, hands-off, hassle-free investment. which is phenomenal. We can get exclusive financing up to 50% of the purchase price as well. So, you know, I mean, the 170 grand one beds, you know, you're having to put around 85k in total, and doesn't complete until the end of 2028. And so a phenomenal payment plan to go through for this. So yeah, look, I think it's a really good one. I'll just show you some of the amenities because it's unbelievable. You got, you know, working space, function halls, ice baths and saunas, yoga studios, you know, all day dining, kids clubs, games rooms. This is the sort of thing that we're talking about. And, you know, I don't know about you guys, but for me, I think it's a phenomenal option from a retirement perspective. Right, I'm going to stop now. But thanks everyone so much for your time.
Yeah, that was
really
great.
appreciate it.
Yeah.
Tried to do that in 30 minutes, but 37,
No, you did.
nearly
Well,
there.
there's a lot of stuff to go through, but basically, like Dan said, you can always arrange another meeting after this, and then Dan will go specifically into your situation, what you're trying to get out of properties or property portfolios, and then obviously send you detailed specific properties that will be obviously in your best interest. But yeah,
I was going to say, we're
oh,
also able to do full, if you do already have a portfolio, we can do a full portfolio review. You know, I speak to a
yeah,
lot of clients who, to be honest, their money isn't working as hard as it should be. So we're releasing equity and getting that working in, first of all, better structures a lot of the time, but in better investment grade products, which is structuring it, particularly from a legacy planning perspective and a retirement planning. You know, it's about making your money sweat as hard as possible and making sure that we're, you know, covering the future generations.
yeah. No, that was great, Dan. Any other questions? There's one question, Dan, that comes up quite a lot. It's come up in our previous ones, but someone asking regarding obviously, is it easy to get mortgages, so on. Did you just want to outline that? Because that's obviously part of the service that you can help with, isn't
Um,
it?
Yeah, look, it is. You know, we've got obviously our own brokerage with I think 170 lenders on the panel. It's bespoke mortgages for depending on different people's situations. But look, the process in the UK is a bit of a nightmare one because of the AML and KYC that you have to go through. It is a bit of pain. There's no getting around it, but it's not a problem in terms of actually the ability to be able to get the mortgages. It's more just the hassle of having to go through the structure of it. There's no way of getting around that. But short-term sort of pain for long-term gain. I personally wouldn't be buying anything in cash in places like the UK using the leverage. If you're, you know, that whole methodology of only putting in like 25-30% and every 1% this grows being sort of 3 or 4% return on capital invested. There's very few markets where you're able to do that successfully. In the UK, using mortgages and that leverage structure is one of the best in the world.
Yeah, and I think that's one of the good things with API, from my own personal view, is you can get everything done, how I call it, under one roof. So they'll obviously source the projects for you, do the mortgages, do the obviously the lettings and managements they can do as well. So it makes it a lot more simpler for our clients to purchase the right properties for them, basically on there. But thanks for that, Dan. Doesn't look like there's any more
Thanks,
questions
Adam.
from you. What we will do, everyone, is you will be sent the recording, or obviously contact the person that introduced you to the webinar, and they'll be able to send it across for you. But obviously, yeah, we're happy to arrange a meeting to discuss further review, if that's obviously what you want to do. So have a
Yeah, I
good
think
evening.
getting the individual consultations with anyone who is interested, we can look at your bespoke, mapping and what you're trying to do for your family, and yeah, every person is different. You know, a lot of us have the same holistic goals, but people have different capital. People are in different situations, there's lots of different ways to skin the cat. So we're here to help.
Thanks, Dan, and then thanks everyone. Have a good evening.
Thanks, everyone. Cheers. Bye-bye.
Bye-bye.